students. Welcome to today's lesson. We'll be continuing our discussion on securities and financial instruments, and our topic for today is second-tier securities market. In this class, our objective is to know the meaning of second-tier securities market, to know the listing requirement of companies for the market, and the advantages of listing of a company to companies and the advantages to the investing public. Now let's start by defining second-tier security market. A second-tier security market is a second market established to list the securities of smaller companies which are unable to meet the requirements for listing on the main market of the stock exchange. The second-tier security market was established by the stock exchange in Lagos in the year 1985 to enable small companies which are unable to meet the requirement of trading on the main stock exchange market to also trade their securities. Now let's move on to listing of companies for the market, that is the second-tier security market. Listing of a company means the admission of a company to trade its financial instrument or securities, that is shares, bonds, debentures, and other forms of securities on a market. Now for a company to be admitted, it must meet this requirement. 1. Appoint the services of a sponsor. 2. The company must legally be established under the laws of the country. 3. The company must have published accounts that conform with generally accepted accounting principles and practices or equivalent standards. 4. The company must ensure that securities listed are transferable from one person to another. 5. It must be adopted by the resolution of the board that the issuer abides by the continuing obligation of listing rules. 6. In the case the company has been generating revenue for less than 2 years, the directors and all employees must agree not to sell any interest they may have in the company's securities for at least 1 year from the date of being authorized as admissible to listing on the second-tier security market. And lastly, the applicant must pay the fees as set by the listing authorities from time to time. Now let's take a look at advantages of listing to the general public. 1. It provides liquidity to investments. Security holders can convert their securities into cash by selling them as and when they require them. 2. Shares are traded in an open auction market where buyers and sellers meet. It enables an investor to get the best possible price for his securities. 3. There is ease of entering into the market, either to buy or sell securities. 4. Transactions are conducted in an open and transparent manner, subject to a well-defined code of conduct. Therefore, investors are assured of fair dealings. 5. Listing safeguards investors' interests. It is because listed companies have to provide clear and timely information to the stock exchange regarding dividend, bonus shares, new issues of capital, plans for merger, acquisitions, expansion or diversification of business, etc. This enables investors to make informed decisions. 6. Listed securities enables investors to apply for loans by providing them as collateral securities. 7. Investors are able to know the price changes through the price quotations provided by the stock exchange in case of listed securities. 8. Listing of shares in stock exchange provides investors facilities for transfer, registration of rights, fair and equitable allotment. And 9. Shareholders are provided due notice with regards to book closure of dates. They can take investment decisions accordingly. Let's also look at advantages of listing to companies. 1. Listed securities are preferred by investors as they have better liquidity. 2. Listing provides wide publicity to the companies since their name is mentioned in stock market reports, analysis in newspapers, magazines, television. This increases the market for the securities. 3. Listing provides a company better visibility and improves its image and reputation. 4. Listing makes future financing easier and cheaper in case of expansion or diversification of the business. 5. Growth and stability in the market through broadening and diversification of its shares. 6. Listing attracts interest of institutional investors of the country as well as foreign institutional investors. Next, listing enables a company to know its market value, and this information is useful in case of mergers and acquisitions, and also to arrive at the purchase consideration and exchange ratio. And lastly, by complying with the listing requirements, the operations of the company become more transparent and investor-friendly. This further enhances the reputation of the company.
And now let's move on to a quick exercise. Question 1. What is the meaning of second-tier securities market? Question 2. What is the main difference between second-tier securities market and normal stock exchange? Question 3. What are the requirements needed to register a company in the second-tier securities market? Question 4. State 5 ways the public benefits from the second-tier securities market. And question 5. What are the advantages of listing on the second-tier security market for a medium-level company? Good luck.
With this, we've come to the end of this lesson. Thank you for joining us. See you in our next class. Bye-bye.